Bitcoin just broke $70,000. And I need you to understand what that actually means, because this isn't just another price drop. This is a threshold moment, the pre-election floor that analysts said would hold, the psychological support that institutions supposedly built, the line everyone drew in the sand. It just cracked. Bitcoin hit $65,000 plus earlier today as of the time of my recording. It is now down 48% from its $126,000 all-time high just 4 months ago. And here's what's happening underneath the price action. Strategy, the company that bet $50 billion on Bitcoin never going down, is now sitting on billions in unrealized losses, and there's a lesson here for all of us. They actually report their earnings today, February 5th, which I will cover tomorrow. And we see that the fear and greed index crashed to 12, meaning literally extreme fear. And we saw over 2.5 billion in leveraged positions, which is why I never recommend it, getting liquidated over the weekend. And Bitcoin ETFs, which were massive buyers all last year, and one of our key signals, are now net sellers this year, 2026. But here's the thing everyone's missing and that I want to get into. What if this moment, this capitulation that everyone's panicking about, is actually showing us exactly how the system works? And what if breaking $70,000 isn't the disaster, but the setup and a golden moment and opportunity for you and for me? So stay with me, because today I'm going to show you 3 layers that are converging and all connecting right now at the same time. The price action everyone's watching, the structural forces most people aren't seeing, and why this might actually be the moment that separates those who understand Bitcoin fundamentally and from those who just bought the hype, that just chase FOMO. So let's break it down. All right, so in order to understand what's really happening, we first have to talk about what $70,000 and breaking below it actually represents, because this wasn't just the random price level. This was the pre-election floor back in October and November of 2024, before Trump won, before the Trump effect, okay, before the ETF mania fully kicked in. Bitcoin was trading in this range, around $70,000 to $75,000. And when Bitcoin rallied, okay, to $126,000 in October of 2025, that old support became the new psychological anchor. Analysts at Citi said it, Galaxy Digital flagged it. The market treated $70,000 like the don't break this line. And for good reason. If you check the average entry price for US spot Bitcoin ETFs, it's sitting around $81,600, according to multiple estimates, which means institutional buyers, the ones who drove the 2024 and 2025 rally, are now underwater on their positions and frankly getting tested. So when Bitcoin broke $70,000 this morning, for me, okay, it wasn't just breaking a price level. It was breaking a narrative. The narrative that institutions create floors. The narrative that Bitcoin ETFs brought stability. The narrative that we're in a new era where Bitcoin doesn't do this anymore. And while I believe Bitcoin's going up to $1 million plus in the near future, that's not what I'm talking about here. And actually, I have always said that I believe Bitcoin is going to experience corrections along the way, because the market is a reflection of everyone's emotions. So it's volatile, of course. But going back to what I'm talking about. So here's what the price we're seeing today is actually telling us. It's telling us that 2024 and 2025, that whole rally everyone called a bull run, which I went into extensive detail in yesterday's video and my previous videos, which I encourage you to check out because everything builds upon each other. All the research I present to you, it all interconnects. But what I covered in yesterday's video is that the whole rally everyone called a bull run last year mainly might not have been a traditional bull market at all. And if it wasn't, then we're not in a crash. We're in something else entirely. A rebalancing, a reset. And to understand that, we need to zoom out and look at what actually drove the rally in the first place. And if we're being honest, okay, just as a quick high-level recap of yesterday's video, 2 things pumped Bitcoin in 2024 and 2025. First, the ETFs launched.
The U.S. Securities and Exchange Commission has approved Bitcoin exchange traded funds in the U.S.
And institutions front ran the halving. Okay, they messed up the whole order, the pattern. And that created the appearance of a bull run. But it was a structural shift, not an organic liquidity driven cycle like we have seen in the past that have driven past bull runs in 2017 or 2021. And second, Trump actually delivered on his crypto promises. He signed executive orders. He appointed crypto-friendly personnel. He nominated Kevin Warsh to the Fed. So the pumps that followed these events, these were real policy catalysts. But they were policy dependent pumps, not macro driven ones. And that's a very important distinction to understand. That said, so what we're seeing right now isn't the end of something. It's the market realizing the foundation wasn't what we thought it was. And that brings us to an example everyone's watching. Let's talk about Michael Saylor, because his situation right now is the perfect case study, as sad as it is, for what happens when conviction meets reality. Strategy now owns 713,502 Bitcoin, with their average purchase price per Bitcoin at $76,037 per coin. Bitcoin is currently trading at $66,000 approximately as of the time of my recording, which means Saylor, the most famous Bitcoin bull run in the world, the guy who literally told everyone to mortgage their houses and buy Bitcoin, horrible advice, is sitting on approximately $5.7 billion in unrealized losses. And today, February 5th, Strategy reports Q4 2025 earnings after market close, which I will cover for us and those implications tomorrow. So you'll want to stay tuned for that. So this is the moment of truth for them. And their stock, MSTR, has crashed 68% from its all-time high. The company is now trading below its net asset value, meaning the stock is worth less than the Bitcoin they hold. And here's the structural problem. Strategy's entire playbook was to issue stock at a premium to buy more Bitcoin. But when your stock trades at a discount to your Bitcoin holdings, that engine breaks. But now, let me be clear about something, because this doesn't mean Strategy's going bankrupt. They hold all their Bitcoin unencumbered, actually, meaning none of it is pledged as collateral. They have $2.25 billion in cash reserves. Their first convertible debt maturity isn't until Q3 of 2027. So there's no balance sheet crisis for them, thank goodness. But what we're seeing is the limit, okay, of the never sell strategy, and I would even go further than that and not question necessarily their never sell strategy, but their mortgage the house, mortgage the farm to buy more Bitcoin strategy. That is not wise. You never bet your essentials, your life essentials, your security, your foundation. You never gamble that for the potential of something greater and bigger in the future that no one can guarantee, because peace of mind also matters. Money matters, but peace of mind cannot be given a price tag. And I share his story with you and what he's going through because Michael Saylor inspired thousands, maybe tens of thousands of retail investors, everyday investors, to adopt his mindset. Buy Bitcoin, never sell. That's good advice. But borrow against it and use it as collateral. Okay, sure. If it's just a small percentage of your Bitcoin, sure. And if you don't mind losing it, sure. I know people who have lost their Bitcoin that they were using as collateral to buy and trade and follow Michael Saylor's strategy. And when Bitcoin goes up, his strategy works beautifully. But when Bitcoin breaks the levels that we're supposed to hold, suddenly the leverage, the conviction, the diamond hands forever mentality gets tested. So the question isn't whether strategy will survive. They will. The question is, what does this moment teach us about how to actually hold Bitcoin through real volatility? Because here's the truth. Strategy's strategy, no pun intended, works for a publicly traded company with access to capital markets. But for the everyday individual, the lesson is different. And that brings us to why the $66,000 level might actually be the setup, not the disaster, as long as you don't bet the farm on it, right? And here's where things actually get very interesting, because while everyone's panicking about the price, hopefully not you, the data is telling us a completely different story. The crypto fear and greed index is sitting at a 12 right now, extreme fear. And historically, extreme fear readings have been some of the best buying opportunities in Bitcoin's entire history. So if you do have extra capital laying around, it could be a very good idea to buy some more, though this is not financial advice. And let me give you some context, because the last time we hit these levels was in February last year. Interesting timing, right? Right before a massive recovery. And in 2022, during the actual crypto winter, the index stayed in extreme fear for months. And those who bought during that period are still sitting on multiples. And in 2018, same thing. Extreme fear marked the bottom, not the beginning of more pain. Now, does that mean we're sitting at the bottom right now? No, I can't tell you that. I can't guarantee that. No one can. And whoever does is lying. But what I can tell you is that the Fear and Greed Index measures sentiment, not fundamentals. And when sentiment reaches these extremes, it usually means the market has already priced in, it's already worked in the worst case scenario. Over $2.5 billion in leveraged positions got liquidated over the weekend. That's forced selling, not organic selling. That's traders who borrowed too much getting wiped out, not long-term holders selling or capitulating. And if you look at Bitcoin ETF flows, yes, they're net sellers this year, 2026. But here's where we need to be really precise about what's actually happening. Because when you see headlines, which we know can move the market, saying institutions are selling Bitcoin, that's not exactly accurate. Let me explain what's really going on. The ETF infrastructure is institutional. BlackRock, Fidelity, Coinbase custody, professional grade products. But the money flowing through these ETFs, that's still largely subject to retail psychology, the same emotions we feel. These aren't pension funds holding for 10 years. These aren't sovereign wealth funds with multi-decade time horizons. In most cases, it's financial advisors rebalancing client portfolios during volatility. It's retail investors panic selling through their Fidelity accounts. It's RIAs protecting elderly clients who can't stomach a 40% drawdown. So what ETF outflows are really revealing is the difference between institutional infrastructure and institutional conviction. The infrastructure is here. It's professional, it's regulated, but the conviction, that's a different matter. That still lives with the end holder, not the wrapper. And right now, the end holders in many of these ETFs are conviction light capital, meaning they don't have a lot of conviction. They don't know why they're holding their Bitcoin. They bought exposure, they bought Bitcoin because their advisor said put 2% into crypto. They didn't buy because they understand Bitcoin's value proposition as a decentralized, scarce, censorship-resistant monetary network. And this is actually really important to understand because it tells us something about the next real bull run. It won't be driven by financial advisors adding a little Bitcoin to diversified portfolios. It'll be driven by pension funds that allocate and hold for years, by sovereign wealth funds that deploy strategic capital, by corporate treasuries that hold through cycles. Those players move slowly. They need regulatory clarity. They need infrastructure fully built out. They haven't arrived yet. So when you see ETFs selling right now, what you're really seeing is the difference between who understands Bitcoin and who was just along for the ride, buying into FOMO. So we see the tourists are rotating out the real institutional wave. Well, that comes with regulatory clarity. That comes with the Clarity Act passing. That comes when the professional, long-term capital that moves slow finally gets the green light to deploy. And we could see that within weeks to a month, hopefully not longer than that. So right now, we're in this gap, in this waiting period. It's the gap between the temporary capital leaving and the permanent capital arriving, which brings us back to liquidity. Because right now, we're still in a liquidity drought. M2 money supply bottomed in 2023 and is just starting to turn positive. And the Fed paused rate cuts, but that hasn't reversed them. So what we're seeing is a liquidity gap, not a fundamental breakdown. Please know that. And the moment liquidity turns, whether through Fed policy, the Clarity Act passing, or global money supply expanding, Bitcoin is positioned to absorb that capital. But here's the critical part. The people who will benefit from that moment are the ones who understand what's happening right now. And to understand that, we need to talk about what actually matters going forward. So as we start to pull this together, all the points I've covered in my videos so far, I want to give you the 3 forces that are going to determine whether this is the bottom or whether we go lower, because it's important to have our eyes peeled open and be aware of all reality case scenarios. And these forces that I'm going to share with you are the signals that actually matter. Not the price action, not the headlines, because those are skewed often, but the structural forces underneath. Force number 1, of course, is the Clarity Act. The White House set a deadline. Banks and crypto platforms have until the end of February, until the end of this month, which is my birthday month, by the way, to figure out the stablecoin yield issue. And as I covered in yesterday's video, which I will link below, There are signs that a compromise is forming, and I remain optimistic. If the Clarity Act passes, regulatory certainty unlocks. Institutions will deploy capital, okay? I'm not a fortune teller, but that's just very likely to happen. And infrastructure will become operational. This is the single biggest crypto catalyst for the whole year, and we'll know in the next 3 weeks. So hang tight, continue to tune in because I'm going to connect all the dots for you. Force number 2, okay? This is global liquidity. Right now, we're still in a liquidity drought, so know that. But M2 money supply is already inflecting positive too. And historically, if we can rescue anything from historical patterns, since we know we are in a singularity moment where all the rules have changed fundamentally, but if some of these historical patterns leak through into our current day reality, we know that liquidity leads Bitcoin by 6 to 12 months. So if liquidity turns on now, Bitcoin follows by mid to late 2026. And frankly, I think this force supersedes all other macro conditions affecting Bitcoin. So I definitely think it will affect Bitcoin and pump the crypto market. And force 3 is the $58,000 level. Galaxy Digital's Alex Thorne flagged Bitcoin's 200-week exponential moving average at $58,000. And historically, once again, if we can rescue anything from history at this point, this has been historically when Bitcoin bottoms form during bear markets. If we test $58,000 and hold, the bottom is confirmed. Accumulation would begin. But if we break below, which is a potential, right, because we're in the singularity, we could see deeper capitulation or a further drop before the final low. And that's the level to watch. And if we go lower, don't panic. Bitcoin's on sale. So long as you're not mortgaging your house or selling something essential or using the money you need for food and for life, if you have extra capital, it could be a good idea to buy the dip. So, okay, here's where this all comes together. We know we're not in a traditional bear market. We're in a structural transition. The ETFs fundamentally changed Bitcoin. It broke the 4-year cycle, which I covered in yesterday's video. We have entered, once again, what I've been calling the singularity, a moment where the old rules don't work and the future is unknowable and in the most exciting way. But what we do know is this: the conditions for a real macro bull run, which are sustained liquidity expansion, regulatory clarity, organic retail mania, we haven't seen those yet, but they are lining up. So what we saw in 2024 and 2025 was a combination of ETF front running and the Trump effect, delivering on all his policy or creating FOMO in the market. In many ways, those were real catalysts. They pumped the market, but they weren't driven by the macro liquidity expansion that creates sustainable bull runs. So, if these things are true, and if the 3 forces I just outlined are converging right now, all coming together, then breaking $70,000 isn't the end of something, it's not the end of the world. It's the moment before the real cycle starts. So, with all this complexity happening in the market, what should you actually do? Because here's the thing. You don't need to become a macro genius. You don't need to decode geopolitics or predict every market swing. You just need a strategy that works across every cycle the world could possibly throw at you. And the data is very clear on this. Glassnode's long-term holder supply shows one thing. That is, the people who hold for multiple years outperform almost everyone else. Dollar cost averaging or DCAing into Bitcoin, which means just simply you buy a little every week, every day, every month, on autopilot beats most active traders. River's DCA chart proves this. It's the tortoise and the hare analogy. Slow and steady wins. Because remember, your peace of mind is also worth something. So here's the strategy. Own more Bitcoin this month than you did last month. Hold it in self-custody, in your ledger, on your Trezor. Keep going for 4 years and let time do the heavy lifting. This is how regular people outperform an entire financial system built around extraction and leverage, capitalizing off of the FOMO effect they know people feel. This is how you keep your sovereignty in a world moving towards programmable money, which I've covered extensively in past videos, the world of digital IDs and financial rails controlled by the biggest players on the planet. So if you want to truly be free and be in control of your life here in the very near future, it's essential you own Bitcoin, and it's essential you hold it yourself. And it's therefore essential you not be shaken by volatility in the market like this. Because here is what breaking this $70,000 range that's freaking everybody else out on the market right now actually means. It's actually showing us who understands the system, who fundamentally understands Bitcoin, and who just bought the hype. The people panicking right now are the ones who thought institutions created floors. The people staying calm, however, are the ones who understand that Bitcoin's value isn't tied to Wall Street's wrappers. It's tied to the network, the nodes, the miners, and decentralization itself. When you hold your own Bitcoin, you keep yourself aligned with the actual network. You hold the keys. You hold your own sovereignty and you control your own financial future. And this is why self-custody matters. It's not a slogan. It's literally about survival. It's about your children and your children's children's sovereignty. Because the difference between holding real Bitcoin and holding a Wall Street wrapper becomes everything during a transition like this. So as we wrap up today's video, here's what you need to remember. Bitcoin broke the $70,000 range, yes. Strategy is underwater. We'll know more tomorrow. And the fear and greed index is at 12. Extreme fear. All while everyone is asking, is this the bottom or is it going lower? And it may, so just brace yourself. But the real question is different. The real question is, do you understand what's happening? Because if you do, you see that this isn't a disaster. It's a rebalancing. Bitcoin's going to go up from here now until forever with corrections along the way. And yes, potentially some steep ones. But please remember and keep things in context because the 2024-2025 rally wasn't a traditional bull run. It was ETF front running and policy pumps. We never got the macro conditions for a sustainable cycle, and those are coming. And what we're seeing now is simply the market repricing everything based on this reality. But here's the thing. The three forces that could start a real bull run. All right, I'm going to list them out. 1, the Clarity Act. 2, global liquidity turning. And 3, Bitcoin holding key support levels. Okay, those forces are converging right now. They're happening at the same time. And we're going to know in the next 60 to 90 days which timeline we're in, which reality we're in. Either institutions deploy capital, liquidity returns, and the actual macro bull run starts. Or the Clarity Act fails, which I doubt it will, but it could. Liquidity stays tight. I don't know why that would happen either, but it could. And we grind through the rest of the year. All could happen. Either way, we'll know soon. And the people who position themselves correctly during this moment are the ones who will look back and realize this was a setup, a golden setup, not the disaster. So follow me for Clarity Act updates. I'll be reporting Monday through Friday. And watch the signals I've outlined. And remember, you're so early. You are on the winning side of history. So don't be bothered by short-term price drops. Because right now, the system is showing you exactly how it works. And if you're paying attention, you'll understand something most people won't see until it's too late. I love you guys so much. And let me know what you think in the comments. I've enjoyed thoroughly reading all your comments and will do my best to answer all of them and bring them into my upcoming videos as they're relevant, of course. I'll catch you guys here tomorrow.